Welcome to Global Money Talk, brought to you by SamProTV. Greetings to our viewers from across the U.S., Korea, and around the world. We're coming to you live from the floor of the New York Stock Exchange in New York City, the financial capital of America. I'm Remy Blair, and joining me today at the New York Stock Exchange for our market briefing and to weigh in on the top stories of the day is Tai Wong, independent proprietary trader. Tai, good morning to you.
Good morning, Remy.
Well, what a day it is today, and inflation figures, hurricane aftermath, a lot to get through.
Yeah, I know. It's a fall day out there. I think it was 44 degrees when I woke up, and it was actually a little bit chilly. And then, of course, today is October 10th, and I always like to get that before we get into the day's economics. And it's an auspicious day for, a lot of Chinese Americans, Double 10, which is the 113th anniversary of the founding of the Republic of China back in 1911. It was actually the day of the Wuchang uprising in Wuhan today, in the city of Wuhan, and that was the uprising that it basically overturned the Qing dynasty, ending 2,000 years of imperial rule. So it's the founding day of the Republic of China.
And it's hard to believe, but it is October 10th already. And as you mentioned, a lot to digest this morning.
Yes.
So here in the U.S., we were monitoring the track of Hurricane Milton overnight. It made landfall around 8:30 p.m. Yesterday in Florida on the Gulf Coast. And I'm sure we were keeping our eyes on some of the damage and the aftermath. So here we are on Thursday morning.
And I think they're still assessing all the damage that's been done. No real count on the number, on the number of casualties. There have been people killed, people have lost their lives,
yes.
But it appears from at least what we're seeing right now that the hit wasn't as bad as it was feared. Apparently some wind shear took a little force out of the hurricane, Cat 3 when it hit. It went through Florida, and our studio in Orlando is out of power today. So great job to the folks who really got us online. Maybe just a couple minutes late, but that's a really a great job. We're glad they're safe. We're just a little out of power there. But there are other things that certainly we've seen the pictures of Tropicana Field where the Tampa Bay Rays played. The roof has essentially been peeled off, which is pretty substantial. There's a big crane that hit one of the Tampa Bay Times building. But on a sort of more pleasant note, there's a kind of a famous guy out there, and they call him Lieutenant Dan because he has, from Forrest Gump, the character that Gary Sinise played, and he has one leg, and he refused to evacuate.
Yeah.
And someone went to check on him afterwards and said, "Are you there? Are you there?" And he poked his head up, says, "I'm here." And he goes, "The safest place to be in a flood is on a boat. Just look at Noah. As long as there's water, it doesn't get into a boat, you're fine. The best place is in a boat." And it was really just kind of an uplifting story to see, a character like that, sort of survive. And then something that sort of brought a little bit of a smile to my face, in the midst of little levity, in the midst of a lot of tragedy and a lot of damage, is I think a sheriff said, "Be careful of gators swimming around in the waters."
Yep.
And I don't want to mess around with any gators.
And for people who may not be as familiar, those creatures, so alligators, are quite big, aren't they?
They're big and they're fast, and I think apparently they can outrun you on land in 100 feet. So you can beat them for about 100 feet or so. They're so big and heavy that they'll slow down, but in 100 feet they're tremendously strong. So I just have to make sure I'm not in front of the alligator. I think I'll stay away from that for a little bit. But another indication that the storm may not have been quite as bad as feared is there's a market for catastrophe bonds, and they're called cat bonds, and they're usually issued by insurers to help take off some of the risk from the places they've insured. And catastrophe bonds are very popular. It's probably a $50 billion market, so it's not a huge market, but there are people who are interested in it because they are uncorrelated to anything else. The weather does not correlate to any other, financial issues or any countries like that. So, and they tend to yield 150, 200 basis points higher than a lot of other things. They're 3 to 5 year bonds, and so they pay more in coupon, and they're not correlated. So people love that. But you'll get a year like last year where there were virtually no storms and people made like 20%. But this year you have 2 big storms, so it's probably going to hurt a little bit. But those folks are thinking that they were fearing a loss of principal. So basically how a catastrophe bond works is, you pay $100, it puts into a special account, and then you pick up the 6.5% coupons or whatever it might be, and then at the end of the year you get at the end of the 2 or 3 or 4 years you get your money back, unless there's a storm, in which case you could lose part or all of your principal. So it is, there is an element of risk there, which is why you get paid more. But nevertheless, they were fearing principal losses of as high as 15%, and now they're thinking maybe it's only half that. So if you're an intrepid investor and you're looking for extra yield, I bet the next issuance of catastrophe bonds are going to require a higher yield to clear. It might be an opportunity.
Well, as you mentioned, we'll keep our eyes on any storms that develop in the Atlantic or the Gulf Coast as we head into not just this month, but the next month as well, because hurricane season will continue throughout most of this quarter. But as we're talking about hurricanes, we saw some of that effect in terms of jobless claims last week. So this morning we got CPI, inflation figures, as well as jobless claims, and tomorrow we'll get those PPI figures. But let's talk about what we saw this morning in terms of data points and also those Fed minutes yesterday.
Right. So, I was watching the gold price as it ticks, because it just updates faster, and I see gold go boom, hits the floor. I'm like, oh, CPI must be a little high. And I take a look, and I'm like, oh, CPI is a tenth higher in both the the overall and the core. And then I see 258 in weekly claims, and I look at gold, and gold was roofing. It dropped from about, I guess, maybe $26.20 an ounce, down to $26.05, and then immediately gained back everything it lost and a little bit more. And gold, for now, is up for the day, looking to break a 6-day, sort of losing streak. So these claims numbers are, very, very high. The highest, I think, since August of last year. Now, immediately the thinking is Hurricane Helene probably has a lot to do with this in terms of, hitting all these states, tremendous flooding. A lot of people probably, certainly can't get to work, but maybe they were able to file electronically, or maybe not. But certainly I think that has an impact. And then next week I think we'll have, another impact from Helene as more people get back online, and you'll see those numbers move around. And then you'll have Milton as well. So I think that number is going to be a little messy and a little jumpy for the next 3 or 4 weeks. But if you look at the immediate impact, interestingly, is that the jobless claims number, I think, had a bigger effect than actually CPI, in part because the Fed has made it pretty clear that right now they're worried more about employment than they are about inflation. This inflation number, I think, likely keeps them from cutting another 50, but they'll probably likely continue to cut 25. And what was interesting, as a matter of fact, was just before those figures came out, I looked at the CME futures, and there was a 0.3%, a tiny little sliver, said we're pricing in no cut, actually, even for November and December. That totally changed. So in the aftermath of the data, instead of 75-25, 75 for a 25 basis point in November and 25 for no move, it moved to sort of 87 and 13, so it kind of halved a little bit. I think the great majority still think it's going to be 25 basis points. I think that is certainly the base case, unless we see something, sort of really extraordinary. And now there's some people thinking 75 basis points by the end of December in total, rather than the 0.3% who thought that would be no cut. So this is sort of the market messing around, trying to, day trade. So I think the dust will settle. I think we'll look at 25 basis points. But it was interesting that the weekly claims number was more important than CPI today. And then you mentioned the Fed minutes. I had a scan through the Fed minutes yesterday, and what struck me really was in terms of the view of the of the FOMC, was it was almost uniformly pretty dovish, in that they were concerned about the great, you hear words like great majority, many, we're concerned that we're going to get a sort of deeper losses in in employment, which they did not want. So the 50 basis points was supported by everybody, except interestingly, Governor Michelle Bowman, who seems to really stand alone in terms of her concern that they didn't need to move 50 at that time. But not much reaction out of the market after the minutes, because the minutes is from a few weeks ago, and we've had that monster sort of payrolls report since then. Now Danielle DiMartino Booth was telling us how that was not as big and as strong as it seems at first glance, but the market's still not drilling into inventories and backlogs and hours worked. So the market's still thinking, okay, we're at 25, so they didn't react so much to the minutes because that looks like it's information that's a little bit dated.
Yeah, and as you mentioned, the September jobs report that we got last week, it already does seem like a lot of time has passed since we got that, but we got better than expected non-farm payrolls coming in above expectations, 250K for headline numbers, unemployment rate coming down, and this came on the heels of the September Fed Reserve rate decision where we got a 50 basis point cut. And as Tai, you mentioned, we do get the employment report for this month coming out on November 1st, and there are a lot of moving parts between now and then we will get the Fed rate announcement for November following that. So.
Right, and that employment report, the November 1st report, for October is going to be a mess because you have this week's jobless claims. Next week is the survey week, so that's the week that they use to calculate payroll. And next week you're still going to have impact from Helene. You're going to have your first look at Hurricane Milton's. So I think if the consensus, if sort of 80% of the people think the ban and non-farm payrolls is going to be like this, I think for consensus it's going to be much wider because you just don't know really what's going to happen in terms of that payrolls number, and you'll have to figure that the revisions the following month are still going to be messy. So having two storms like this, pretty big back to back, throws a wrench into those figures, and I think the Fed will probably like to say, listen, steady as she goes, 25 is probably safe, let's see how we do in December, maybe another 25 then. I think they're going to have to deal with the noise that you see, certainly in national employment figures.
Yeah, and before we move away from inflation, just some points. Just looking through some of the data points in the CPI. So we saw moderation in housing prices, which is in terms of inflation, that was good news. But we've talked about eggs, whether we're talking about the port strikes or the cost of eggs in the store, and it does appear as though there was an uptick in terms of the price of eggs, and it seems to stem from some of the outbreaks in terms of bird flu that we've seen last month.
That, and then I think this storm Milton has done some damage to the citrus belt, and you're kind of around that sort of harvest kind of time. So I mean, I don't know, I never watched frozen concentrated orange juice futures, but as you said, inflation on food, which people feel and see, has ticked up. I noticed another one, airline fares sort of jumped. Not sure what was behind that. It was like a 3.2% jump or something like that. Sort of led the inflation figures, and maybe that doesn't last, but certainly, a tenth above consensus on both the core and the headline is enough to say 25 is safe. We're going to get 25, and we'll continue to watch the economy.
So we've highlighted the increases we saw in terms of monthly changes in September for the CPI figures, but it does look as though gas prices, fuel, oil fell. But given the move higher that we've seen in energy, do you think that'll affect next month?
So the link between crude prices and gasoline is kind of a volatile one. It depends a lot on how many stocks there are, are enough refiners refining, or are they some refiners are offline because they need to do some sort of care and maintenance. The summer driving season has come to an end, so it may not immediately impact gasoline. Interestingly, as over the past couple of weeks, as crude prices have jumped, gasoline prices have stayed near recent lows, at least near where I get gas. So unless there's a big strike on Iran's oil facilities, and we're still waiting for that retaliation. Now there's talk about maybe they'll hit the Iranian Revolutionary Guard sites or something like that. The administration doesn't want a shock to the oil market, 4 weeks out of the election. So I think if you get a big shock, certainly crude prices go up and gasoline prices will probably follow relatively quickly. But right now it seems like those two are relatively split apart from each other. The other thing I would mention is there's a true-flation figure that many people have started to look at over the last couple of years, and which suggests that it's a more real-time look. And that true-flation figure was down at 1.5%. Maybe 3 weeks ago, and it's actually climbed back pretty steadily to 2%. So it kind of corroborates the story, as you mentioned, about food inflation is finally sort of coming back and hadn't been seen in a little while.
Yeah, so a lot to keep our eyes on as we head into the next couple of weeks. And as you mentioned, Tai, the countdown is on. Hard to believe, less than 4 weeks until the presidential election.
Yes.
So, given everything we've seen in the Middle East, there's a lot geopolitically as well as politically, and I'm sure we'll continue to bring any updates to our viewing audience. So why don't we take a look at markets this morning? In terms of the major equity averages, we saw the Dow and S&P 500 close at record highs in the previous session, but in today's session we are seeing red across the board for the major stock averages. The Dow, Nasdaq, and S&P 500 all lower by about 0.2%. So I do want to shift our focus on over to Asia. So we're counting down to Saturday when we get the finance ministry speaking again, but we do have another session to go before that event coming up on Saturday. So what are we seeing over in China and in Hong Kong?
So the China benchmark index, the CSI 300, was positive, but little change. It was positive on the day, but really little changed. And that that kind of technical candle that says that the market is really undecided. They're not sure. But a friend of mine, who's really kind of a China expert, sent me something, on X, forwarded me something on X, and I'll read what it says at the announcement about the Saturday morning press conference. And it says, the theme of the upcoming finance ministry presser is on intensifying counter-cyclical adjustment of fiscal policy. Okay. So I don't think the market really loved that, because they're saying, oh, the problem is cyclical, so we actually have to fix it. The problem, as I think anybody who looks at China knows, is really structural. But if you're in China and you're a finance ministry or whatever it is, what are you saying? And you're saying the problem is structural. Yeah. That means there's a problem with the structure, and there's as a practical matter, one guy who's running it. It's sort of like saying the kingdom's kind of rotten. So what does that say about the king? So whatever you're thinking, you can't really say that. But if you think it's counter-cyclical, and counter-cyclical means a little bit of a tweak. I think they need more than a little bit of a tweak. So if we get just a tweak, it's not going to be enough. I think it's going to disappoint the market. In the meantime, I think the Chinese financial markets were cheered by the fact that Guotai and Haitong, the two brokerages, are merging. And this is their grand plan to say, we only want 10 leading brokerages by, in a 2 or 3 years' time. The government's going to enforce these mergers. Now, the combination of those two is now bigger than CITIC Securities, which had been the leader. And they're part of the sort of the master plan is in the 2030s, China wants 2 or 3 leading brokerages that are world players. Now, whether they get there or not, there's a lot of time and a lot of hurdles in between. But that's what they're looking to do. But the issue and the issue is really, it's really not. It's a structural problem. If you can call it cyclical, but if you want to deal with it in a structural way, that's pretty clever. But now the market is thinking consensus is around 3 trillion yuan in fiscal stimulus, with maybe half of that going to the local governments, which used to make a lot of money by selling land. Well, there's nobody buying land right now. Those developers are all curled up in a turtle, just trying to look and to survive.
Yeah.
So, as a matter of fact, 2 trillion probably isn't enough. I mean, that is, divide by 7, that's 1.4, 1.5, trillion. Sorry, a little problem with arithmetic here. We're only talking about maybe $500 billion or so, depending on where they are, right? 7 times 7, $500 billion or so U.S. It's really not enough to turn that really, really big ship around. Their problems go a lot deeper than that.
Yeah.
So 2 or 3 trillion, if we get that, I think we may get sort of a little more of a correction as we go on. But we'll wait for Saturday morning.
Well, we will keep an eye on what comes out on Saturday morning. That will obviously be Friday evening for us, but we will bring you any updates next week on Monday.
Absolutely.
And before we move away from the markets, I very quickly want to take a look at Tesla.
Yes.
So today's October 10th, and that means it is Robo-Taxi Day.
Yes.
And we will get an announcement 7 p.m. Pacific, 4 p.m. Eastern Time. So what do you expect to hear out of this?
So I'm planning to watch it, actually. He's going to show off. Elon has sort of bet Tesla's future on robo-taxis. The whole idea is, you have a robo-taxi, you own a robo-taxi, and you're not using it, you can actually just use that as a taxi service and sort of make almost passive income out of your car. That's actually the dream. It seems a little far-fetched to me, but over time, it's been hard to sell short Elon for any length of time, because the guy is a visionary. Like him or not, for whatever he stands for, he's a visionary that we don't have guys like him, and you want guys like him. And as a matter of fact, before the sort of political sensibilities and controversies, I remember Bill Gates once said that maybe the best thing I can do for the world is just give my entire fortune to Elon Musk and let him do stuff with it. Right? This is a man who's a visionary. So anyway, he's going to show the robo-taxi, and people mumble, oh, it's not going to be live on the street. It's going to be, I think, in one of the film studios. I wonder if it's Warner Brothers. It's this new car. It's supposed to have butterfly wings, and so you need to knock people's socks off a little bit.
Yeah.
And I think Tesla shareholders, or anti-Tesla shareholders, are a little nervous about it, because the price action in the Tesla stock hasn't been great. We've had a lot of slightly lower highs, haven't been able to break up higher. I think we break up higher than the recent highs. I can't remember if it's 260 or 270.
Yeah,
it could run a little bit if shorts have to run and cover, right? But, shorts. There are a lot of shorts have been carried out trying to short Tesla for over quite a few years. So I think we'll watch that. And in some ways, you want that to be successful if you're the market, because that's just going to say, you know what, this is new, AI is working. That's going to give the market, which has been kind of moody. It's a little moody today. Maybe it gives them sort of a little boost.
Yeah.
So I think it'll be important to the mentality of the market, certainly for Tesla shareholders.
And as you mentioned, when we're talking about Elon Musk, we talk about him a lot on the show. We mentioned how he appeared last weekend at Trump's rally in Butler, Pennsylvania, and here we are talking about him ahead of this robo-taxi event. And of course, we've also mentioned him when it comes to internet access in hurricane-hit regions here in the U.S. and the Southeast. So there are a lot of moving parts when we were talking about someone such as Elon Musk.
I was just looking at an article yesterday, and I use an Android phone because I like the phone and it folds. But if you have iOS 18, so if you have an iPhone 14 or more, if you download iOS 18, or is it 19? I'm not really an Apple guy, but you can now actually get access to a satellite, and I think a lot of those satellites are Elon satellites. So if you're jammed up and you point your there's an long article, point your phone to the sky, it'll pick up a satellite. If nothing, other things aren't working, and you'll at least be able to text and tell your family that you're okay. So I mean, a visionary, the Starlink satellite, there are thousands of satellites up there. So I'm kind of rooting for him. I really hope he knocks our socks off.
Well, we'll be bringing our viewing audience the latest update
Yes.
after this evening's event. So, Tai, as always, thank you so much for joining me. I look forward to dissecting the PBI figures and what comes out of the robotaxi event with you tomorrow morning.
Great to be here.
Thank you, Tai. And coming up next, I'll be joined by Larry Dyer, fixed income strategist. So don't go away, we'll be right back.